Hello, I'm Dan Marks, and today I have with me Andrew Violin for the Dornbush download. If we get a bit of a wrap on the Murray report, Andrew, that's something that happened this week, and it's sort of...
Sure. So for those people who aren't aware, Murray is the guy that used to run CBA, and he was commissioned by the federal government to review the financial system. Last Sunday, strange day to be releasing a report.
It is, isn't it? Sundays.
Maybe not getting as much media scrutiny, but anyway, last Sunday released a report, 44 recommendations. Of key concern for the market was around the banks and how much capital the banks may need to hold. There was a lot of concern that they were going to have to raise something like $50 billion, which obviously would have been a lot of money.
A big ask.
We're sort of back to, Murray came out and said around $25 billion, which is still a substantial sum of money, but that can actually be done just through dividend reinvestment rather than actually going to the market and doing a capital raising or asking for more money. Yep. Number of other recommendations, probably the big one for people watching this is around credit card fees. We all begrudge going into, like I go to JB Hi-Fi a little bit, and with my credit card and paying, I own shares in JB Hi-Fi, and paying a 2% credit card fee. I mean, I think we all begrudge that. Murray was saying that needs to go. So certainly the federal government is now taking that on board, asking for feedback, and will decide which of these recommendations it will enact in April next year.
Yes, so still a long way away.
And lots of lobbying and all that type of stuff that will be taking place. But certainly Murray, not as bad as the market was expecting.
And I did see on that day the banks performed quite well, didn't they?
The banks actually kicked up. So again, because the expectation was the $50 billion was needed, they got out of jail with only 25.
Yes.
So the market was pretty happy with it.
Was pretty happy. The other thing, Santos, Andrew, it just keeps coming off, doesn't it?
Michael and I were speaking briefly last week about energy companies, and in particular Santos, and at that stage it had gone from 13 back to about 10, I think, or something like that. $7.20 this morning. This was an ASX 50 company, They've come out and said that they have $2 billion in cash and undrawn reserves, and yet the share market have the big stick out for them at the moment.
There was that report, wasn't there, from BG of all the cost overruns on the pipelines that they're building. It's just a bad space at the moment. And
I think the big thing concerning for Santos in particular is that there are analysts out there saying now they need to go out and raise money because, of course, the oil price this morning, $59.05, I think it got to. Yeah. Bear in mind, 3 months ago it was $100. Our camera person's just fallen backwards hearing that price. That is not a typo, $59.05 this morning.
I was reading some statistics around that. $72 a week is the average household spend on petrol, so 40% drop in that's $28. Yeah. If interest rates come off 0.25% or 0.25%, that reduces the average home loan repayments by about $600 a year, or $12 per week. So maybe we won't be seeing those interest rate cuts that they've been talking about now if fuel does come off like that and stays low.
It's a great point. Falling oil prices are by proxy a cut in interest rates.
Yep.
You're spot on. Because not only is it, you gave the analogy of people driving their car, the example rather, but it's like transportation companies, Toll and Cube.
It's across the board, isn't
it? Woolies and Wesfarmers, because that's all built into their costs as well.
Yep.
So,
and I think people find it easier to go and take that extra cash, which they're not putting into their fuel tank and spending it as well.
And that's really, what we're hoping will occur in the economy. Of course, we saw during the week some fairly poor consumer confidence numbers, and in particular the big concern was around the fact that people who have major purchases, that sort of number has dropped by about a third. So in other words, a third of the people who were going to make a major purchase over the next 12 months are just doing nothing at the moment. And be that political instability, be that economic uncertainty, certainly, it's mixed messages for the economy. I see
and the people just keep bunging it into their home loans too, Andrew, don't they?
Which is good news for the banks.
Great news for the banks. Yeah.
Anyway, what am I buying this week? Thank you for asking.
What are you buying this week?
I'm buying Cube. So we just
spoke. Is anybody spending this?
Well, people have been buying BHP, Woolies and Santos. Like in my world, they're the three that people have been buying. But Andrew's pick is Cube. We were just talking about transportation companies before. Cube is actually run by or chaired by Chris Corrigan. And everyone would remember Chris Corrigan was the guy involved with Patrick's and the unions back in 1998. So people either love him or hate him. But certainly he's not a showy type of guy, and from a share market point of view, they've actually been performing reasonably well. Share prices come off a little bit of late, and we think that's probably not a a bad buying opportunity. They recently have been able to spend or be involved in spending $1 billion on a freight terminal in New South Wales and Sydney, and obviously that's a big thing. And you know, we know about freight terminals here by the work being done by John Dornbush, so we know how pivotal they are. So certainly Cube at about 230 we think looks pretty interesting.
Yeah.
Dan, anything else from you?
Nothing else from me. It's
All right,
Friday.
Well, yep, Michael's
Christmas party tonight.
Yeah, and Michael's off playing golf today. So, and Mark Cecil's being dunked in a dunking machine. So check out the Livestrong Life Insurance Facebook page.
That's going to be cool today.
It's going to be very cool. Till next week.
Cheers.